I want to touch on the move that we've seen in the so-called low-quality, high-beta stocks. If you look at things like the ARK Innovation Fund, looking for its fourth positive month, best streak since August of 20, it's just an indication of the kinds of stocks that have ripped. The high-beta ETF, more volatile, obviously, the kind of stocks we're talking about, coming off the 6th week of gains. That's the longest streak in a year. High-beta hit another record high today. Speaking of ARK, one of the top holdings, Roblox today, the target raised to 133 from 103, reiterated by at B of A. You own the stock, Kev?
Yeah, I love it. You know, it's not going to be a profitable scenario, but what we're talking about here is this infrastructure. That's why I love Robinhood, American Express, Roblox. They control the younger demographic. And what we're seeing here is just a company that's embracing AI, bringing in more users. And if you believe in the long-term thesis of who controls the eyeballs, you can't not have this on your playlist.
Josh, we've talked a lot about these stocks lately. I'd love to get your take in a day in which B of A, their trading desk, says you've got the green light now to press low-quality shorts, that the retail speculative bid, which is what this has been all about, this, meme stocks and the like, is now showing signs of fading, coupled with systematic short covering being in the late innings. Are we on the cusp of a rollover here that we need to pay attention to?
You know, it depends on what your portfolio looks like, whether or not you have to pay attention to it. I think most people watching the show, even if they're professionals, but I would say most retail people over the last couple of months have probably taken a few flyers. They've probably added some lower quality stuff to their portfolio. And I hate to say this out loud, but we all know it's true, mostly for the recreational aspect of it. We got into a moment over the last couple of weeks where like guys were doing Bitcoin treasuries with publicly traded shell companies that literally had tiny floats, and you could just say, hey, look, we're going to buy ETH, we're going to buy Bitcoin, we're going to buy this, we're going to buy that. And instant reward because people just get so excited at the possibility of 10xing or 100xing an investment. And I wouldn't say that that's a death knell for the overall stock market, but it's definitely like one of the things that you want to watch for. And we got into that moment. And that's just one example of a lot of things that we've seen. We're now seeing people talking about meme stocks as a deliberate investment strategy again. It's been a while, professionals too. And even if you just look at like high beta within large cap stocks, like away from the freak show in the micro caps, SPHB, which is at the S&P high beta factor ETF, is up 18% year to date. The year to date return for MSCI US high quality is only up 5%. So we know pressing high beta has been successful. The thing is about any momentum trade, whether it's commodities or stocks or anything really, is that when it ends, it really ends. And this looks like one of those moments where the people who took flyers on a lot of low quality stuff that they didn't really care that much about, they're probably saying to themselves, all right, that was fun. This game looks like it's over. And that's when those things start to roll, and they can roll really hard, depending on how low quality you've gone. So I think for the most part, most people aren't putting serious money into that part of the market, or if they are, they have a very, very quick trigger finger. So I wouldn't worry too much about it from a macro level. But yeah, if you've been someone who's been having a little bit too much fun, checking your app a little bit too often, today is not your favorite day.
I just want to mention, can we show shares of Palo Alto, please? Because we do have some movement within the cybersecurity space. There's a story moving right now from Bloomberg, I believe, is reporting that Palo Alto Networks is nearing a $20 billion deal for the cybersecurity firm CyberArk. It would be the latest move in consolidation within what has been one of the red-hot sectors of this market. Palo Alto shares, as you would usually, I think, expect, the suitor is the one who usually sees their stock decline on word of a potential deal. Josh, I'll come back to you real quick, and then we'll work it to Joe and to Steph. So be brief if you could. This just shows you where the action continues to be in many respects within the software space that's been red hot.
Yeah, it's so funny because we talked about the rumors that were on the tape last week, where the story was that Palo Alto was looking at SentinelOne. SentinelOne obviously down big because they are not the one, and it looks like it might be CyberArk. There's too many names in this space. So there's two different ETFs that track the cyber sector, Scott.
Yeah.
And they both just have too many companies. And so
Journal's
I think
got it too,
this is
by the way.
rational activity.
Sorry for interrupting you, but you see the Journal's got this as well. 20 billion apparently is what the number is. Sorry to cut you off there, Josh. Just finish up, and I want to hear from these guys too.
Yeah, I think when you talk to Fortune 500 companies, they're not looking for 10 different vendors. Most companies, even small businesses, they want one solution. They don't want patches. They don't want API connections. They want to call one company like a Palo Alto or a CrowdStrike and say, please secure our business. And so there are too many vendors, and this is super rational activity. I like to see it.
Yeah. Steph, what do you think?
Well, if it's true, their annual recurring revenue is going to skyrocket because that is the CyberArk story for the second half of this year. And everyone knows that's what you want in these companies because it's more secure, stable revenues, right? So I think it would be positive. Obviously, I'm not happy that the stock is down because I own Palo Alto, but I think what they're doing for the long run is very important. We have 4,000 companies in this space, and we're going to see massive consolidation, and the big five are going to get bigger and bigger. I've been saying it for 2 years. We're seeing it, and I applaud it because they're going to be able to offer more to their customers, which is what their customers want.
This would be an absolutely phenomenal acquisition for Palo Alto. Israel is the second leading exporter of technology in the world. They too do technology just as well as we do it here in the United States. CyberArk, Israeli-based company. The other Israeli-based company, which I own, is Checkpoint Software. Keep your eye on that one. Both CyberArk and Checkpoint have a market cap of around 20 to 25 billion.
Kev, you own it too, don't you?
Yeah, we own Palo Alto. We were talking with Josh last week about the SentinelOne possibility. I think the CyberArk is fantastic. It's going to be accretive almost immediately. There's synergy there. Do we wish Palo Alto was up today? Absolutely. Maybe it's an opportunity to buy it.
No, but I mean, as I mentioned, this is the typical move in a stock you usually see. The buyer is the one whose stock typically goes down in the knee-jerk.
100%.
And then you let things settle out, and then you see how the market really assesses what the deal is going to be. So we'll follow that. A couple of headlines there regarding a potential transaction in the red-hot cybersecurity space. You see the stocks are both moving on it.